Hello everyone and welcome to this week's stock market analysis. My name is Joe and let's get started. Okay, right off the bat you can see we are still in this uptrend, and today we hit a nominal high in the Dow of 11,000, which a lot of people were excited about, and I'm going to sort of put a damper on that right now for you. Today we are up 0.67% on the Dow, or on the S&P 500, I'm sorry, 0.67%. And in gold today we were up 0.77%. We're actually higher today in gold than we were in stocks, so what that really means is today was a down day for stocks, even though we hit a new high nominally. In real terms, we did not hit a new high. And people like to dismiss gold as a currency, but it is still a currency because it's a commodity. Every commodity is really essentially a currency and needs to be thought of as such, and it needs to be respected as such. So let me tell you a little more about the gold and stocks this year. This is the beginning of 2009 right here. From here to here we have a 7% rally. We are up 7% on the stock market. But from here to here on gold, we are up 6%. So we're really only up 1% on the Dow. After all this mess of an uptrend, we're really only up 1% on the year in real terms. So not too much to get excited about there. We're already in April and we're only up a real actual percent. So that's that. And of course today was a low volume day. On this down day here, we traded 4.5 billion shares in the S&P 500. The next day we did 3.7 billion, and today we only did 3.3 billion shares in the S&P 500. I know I've been tooting that horn for a while that low volume matters and you need to pay attention to big volume, and I think it's going to come to be true here. A lot of people want to dismiss volume, but those are the people that usually get burned when they're not paying attention to volume. So also we've been up for the 6th straight week, and the last time that happened was at the March lows. I'm going to go ahead and show you that instead of just talking about it. This is our 6th straight week here, and then here's the March lows, and you can see we were up for 6 straight weeks there too. But we had a reason to be up for 6 straight weeks then. The market was ridiculously oversold, and I actually went back 20 years to see when this has happened before, and usually when we had 6 straight up weeks, the next week was a down week. I'd say 90% of the time. There was one time in 2003 in 20 years, it was in 2003, the end of 2003, where we were up for 9 straight weeks. No unchanged weeks or anything, just straight up. And when we finally did correct after that, we erased all the gains before we went, all the gains before we went back up. So that's something to think about there as far as just how overbought we are. And I want to show you also, let's go back to the daily time frame on the chart here, and I'm going to open the RSI and show you. I talked last time about the RSI and how overbought it was, but now we actually have a divergence in the RSI. You can see ever since here we've been trending lower here on the RSI as the market's been going up. So that means the relative strength in the market has been going down while we've been going up, and usually when that happens we have a nice old correction. Some people are calling for an all-out crash. I'm just going to call it a correction at this point. So, another thing I wanted to point out about this market is we have not had a down day greater than 1% in 33 days. 33 days we haven't had a down day greater than 1%. It's this day here that I'm talking about. And since then, that means that these down days here, they hardly matter because they are pretty much insignificant. Because what moves people is when they hear that the market's down 1% or 1.5%, 2%, whatever it is. But when you hear the market's down 0.5% or 0.7% like it was here, you're not really given that much credit to it. You don't really care that much, and no one really did, which is why we had to see follow through here on Thursday and Friday. I said that on the blog this week. And for those of you who don't follow the blog, it's just simply derivativejoe.blogspot.com. The link's in the description, I believe. And so yeah, I said we needed follow through these next 2 days, and we didn't get anything. But this action here does kind of tell us that there's still buyers here. We had this down day, and buyers came back in, they're not just going to disappear like that. They're going to stay here for a while until the market gets low enough. When the market gets low enough, then they're going to have to start to sell, and then they'll probably start selling in mass. That's usually the way it works. So that's that. Now I'm going to switch over to the VIX here. This is something I also posted on the blog, but I wanted to show it here because it's pretty interesting. This is the VIX. Okay, this is a chart of 3 years on the VIX. We hit a low this week twice. Today being one of them, I believe. Yeah, we hit a low on the VIX today. And I want to show you what happened last time we got down to the 16s in the VIX. This is the last time it happened. And you can just see what the VIX did after that. And this is another time when we were in the teens, but kind of around this area. And this is the other big time we were in the 16 range on the VIX. And this here, we sort of want to discount that because this is the first top. I didn't go back far enough, but this is the first top in the market. We hit a double top here, and this is what the second top was. So this is a 16 level here and here, and this is kind of just another low point. And I want to show you where the S&P, what the S&P did on these bubbles. And let's bring that up. You can see this is where the first bubble is, and you can see we went down. This is where the second bubble is. You can see we went down. This is where the third one is. In May, we went down and down and down and down and down. So I'm not saying we're going to crash, but we are due for something to happen here. The volatility, when it gets this low, it tends to snap back. And I'm going to pull it back up here. I think for it to matter, the VIX has to get up above 20 again for us to really start thinking about where we're headed after that. And okay, a couple things about this week. We have options arbitrage this week. We have earnings next week, which could, always be something to watch out for, because that's what actually is supposed to move the market. Earnings. Now let's talk about earnings for a second. Earnings this week have to really be blowout. They have to be awesome because of how far we've come. We have to prove to the market that the market has not gone too far too fast. So these earnings have got to just blow away what people's expectations are. And you know what? They actually might, because we were so far, the economy was so, perceived as so bad a year ago. So they may actually look pretty good. Now, we also have China's trade balance Saturday, and we'll get that number sometime. They don't actually tell us when the date is or when the actual time is. China's kind of been like that. They don't give you exact times usually. But we'll get the trade balance, and that's a big, really important number from China. We always react to that one. So now let's talk about the Fibonacci time ratio really quick. I talked about that before a couple of videos ago, and that's these vertical bars here. I talked about how we were kind of going to decide if we were going to use the 175 or the 1786 level. And it looks like we're going to have to use the 1786 level because nothing really too exciting happened since the 175. And you can see this is the 1786 level. We are pretty much on it, so we can expect some action this week. Some pretty good action this week. And if not, maybe the next week. But I think by the end of this month, we'll get our correction that we're looking for. And if I'm wrong, I'm wrong. So, and by the way, if this market does go up next week and we have our 7th straight week up, I'll have a certain special commentary about it, but it has to happen for me to make the commentary. Okay, thank you very much, everybody, for watching. Hope you have a great trading week this week. I hope you all make money, and please leave some comments. Let me know what you think. Let me know if I missed something. And I only got 10 minutes to put this video together, but thank you, everyone, and have a great week. Bye-bye.